Good day, Junior Tickies. I'm Mrs. Bromacombe, and we are looking at companies where the focus now is going to be on a combined activity. But before we start with the activity, there is one very important point that I need to show you. If I look at the retained income and the appropriation account, there are different options in how the closing transfers can happen. The first option, no transferring of the retained income in the beginning to the appropriation account. And you will see in this activity, this is the similar option that we use. If I look at option 2, it means that the retained income in the beginning is transferred after the buying back of shares to the appropriation account. The third option is where the retained income, the balance in the beginning, is transferred before the buying back of shares to the appropriation account. Familiarize yourself with all of these options. You can choose what works for you. Now, activity 8, the last activity, there is a lot of things happening. So we are going to break it down into the different questions. Starting with question number 1. Refer to information B, point number 6. On 30 April 2021, the end of the financial year, the accountant calculated the net profit before tax to be 1,850,000, but thereafter discovered that the following had not been considered. So there's adjustments that we need to make. The director's fee for April 2021 had been debited to the salaries and wages account in error. The total director's fee for this accounting period was 840,000. So now we need to do a correction. If I look at the profit and loss account, it's minus on the debit, plus on the credit side. This is typical, a type of question that is asked in financial statements to calculate the correct net profit. And we're going to look at it later on. So I'm just giving you an illustration of that by incorporating it in this question. So the net profit was incorrectly calculated as 1,850,000. So to make that correction, director's fees and salaries and wages, both is regarded as an expense. So it won't impact the incorrect net profit, but we need to still show the transaction. So the salaries and wages was incorrectly debited, which means we now need to credit salaries and wages. Because our expense will decrease, it will have a positive effect on the profit and loss, and that's why it will appear on the credit side. Salaries and wages, 840,000. Now that the correct account can be debited, director's fees, which means our expense will increase. Because our expense increase, it will have a negative effect on the profit and loss, and that's why it appears on the debit side, 840,000. So the effect on the accounting equation, account debit, director's fees, account credit, salaries and wages, and your owner's equity is plus minus 840,000. The next adjustment, the auditors will only be paid 75,000 on 15 May 2021 for work done in April, which is our current financial year. So we're only going to pay them in the next financial year, which means this is still outstanding. It must still form part of my expense for this accounting period, although we only pay it next year. This means accrued expense is going to be credited and my audit fees is going to be debited. Because audit fees is debited, it will increase my expense, which will have a negative effect on that net profit. This is why it appears on the debit side, audit fees 75,000. On the accounting equation, account debit, audit fees, account credit, accrued expense, owner's equity minus 75,000, liabilities plus 75,000. The last one, income tax is now calculated at 28% on the net profit before tax, which means we now need to calculate first what is our correct net profit. So now I can go to the profit and loss account. The credit side minus the debit side means my new profit is 1,755,000 times 28%, and that equals my income tax for this year. So to show the income tax on the accounting equation, income tax is debited, it's an expense. SARS income tax is credited, owner's equity minus, liabilities plus. Question 2, complete the following ledger accounts for the year ended 30 April. So we need to complete ledger accounts. You are provided with information relating to Paddocks Limited for the year ended 30 April 2021. The company has an authorized share capital maximum of 2.5 million ordinary shares. 50% of the authorized shares has not yet been issued on the 1st of May 2020, which is the beginning of the accounting period. The Chief Executive Officer is Ms. Louisa. So where do we start? We start by filling in the information which we've got. So I'm going to start with the opening balance. But before we start with that, if we look at authorized 2.5 million, 50% has not yet been issued, which means 50% is in issue. So the total number of shares in issue on the 1st of May is 1,250,000. In my ordinary share capital, we're going to have 7.5 million, and the number of shares is 1,250,000. In a test and exam, it's always important to show your calculations in brackets. So you will see that right throughout the activity, I'm going to show the number of shares in a different color. Transaction number 1, a number of ordinary shares were issued on 20 May 2020. All shares were allocated and 2,250,000 were received on 31 May 2020. This means that our bank is debited and ordinary share capital is credited. But now the number of shares in issue or issued is unknown. I don't know. They said they didn't provide it to me. Then on 30 April 2021, the company decided to repurchase 100,000 shares at 150 cents higher than the average price per share. They will qualify for final dividends. So what is happening here if I look at my timeline? The end of the accounting period, 100,000 shares were repurchased. Now remember, they will qualify for final dividends. So when we're calculating the dividends recommended at the end, you need to keep this in mind. So what do I know? I know that the total amount of shares that we've repurchased was 100,000. In ordinary share capital, we will always show the average price. So it's unknown. I don't know what's the average price. And in retained income, we will show 100,000 was repurchased at 150 cents higher than the average price. But now there's a problem in this activity. I do not have the balance at the end of the accounting period, which means I can't use the balance at the end to find out number of shares so that I can find out the average price as well. I don't know what is the number of shares that was issued, so it is unknown. So it means I now need to look at what else have they provided me with to see if I can solve this. Now, if you remember earlier in my videos, I said to you, when we looked at dividends on ordinary shares is always calculated on the number of shares in issue. So you always need to know what is the number of shares issued. This should give you now an indication, but I need to see if that information was given to me to see if it can help me solve this. If you look at the information B, number 3, the company paid provisional tax, we'll look at that later on, and interim dividends of 50 cents per share on 31 October 2020. This was applicable to all shareholders. 750,000 was paid to the shareholders. So if I want to find out the number of shares that was in issue, we take 750,000 divided by 50 cents, which means 1.5 million shares was in issue when we calculated the dividends that was paid to the shareholders. And they said it was applicable to all the shareholders. So if I go to my timeline, if 1.5 million shares was in issued, and we had in the beginning 1,250,000 shares, it means the difference will show me the amount of shares that was issued on 20 May 2020. And we've received the money on 31 May 2020. Just a correction, the date is May the 31st. So I know now that 250,000 shares was issued. Now that I've got the total ordinary share capital and I know what is the total number of shares in issue, I can calculate the average price. So to calculate the average price, we take the total ordinary share capital divided by the total number of shares, which means that my average price is 650 cents. On the debit side, we can now complete 100,000 times 650 cents or 6 Rand 50 equals 650,000. To balance this account, we take the credit side minus the debit side. My new balance is 9.1 million. And the number of shares in issue at the end of the accounting period is 1,400,000. So take note, what was important in solving this? Number 1, use the interim dividends to calculate the shares in issue. Then calculate your average price, then you can complete the ordinary share capital. Completing SARS income tax, we start with the opening balance. They set to you a credit balance, which means we owe SARS. Balance brought down on the credit side, 25,000. The transactions for the year ended 30 April 2021. The amount due to shareholders and SARS were paid on 31 May 2020. It means SARS income tax is going to be debited with 25,000. And my details, the contra account, bank. The company paid provisional tax of 242,500 and the interim dividends, I don't care about that at this point. This means bank is credited, SARS income tax is debited on October 31, 2020 with 242,500. Then at the end of the accounting period, the company made a second provisional tax payment of 242,500 and the directors declared a final dividend, which I don't care about at this stage. We are busy with SARS income tax. Again, bank is credited, SARS income tax is going to be debited with 242,500. So now, remember earlier, we had to calculate the correct net profit. We had to calculate our income tax. So our income tax was 491,400. Income tax is debited it will always appear on the credit side of your SARS income tax account. The total amount paid is $485,000 for this accounting period, only the provisional tax payment. Payable to SARS, what we owe SARS is $491,400. So this means that we still owe SARS. We didn't pay enough. So to show this in our general ledger account, I know that we owe SARS $6,400. So when I balance this account, I'm going to start with the credit side. The credit side minus the debit side is balance carried down, means balance brought down $6,400. Looking at our next question, the appropriation account. Transactions for the year ended 30 April 2021. Now remember, what will appear in your appropriation account? It's your income tax and the net profit. Now we've calculated the net profit, the correct net profit, earlier in question number 1. So that's our starting point. We're going to use the same amount that we've calculated, $1,755,000. My income tax was calculated earlier as well. We use the same amount. Income tax is closed off to the appropriation account, so it will always appear on the debit side, $491,400. Now looking at our dividends on ordinary shares. Interim dividends was paid $750,000, but now we still need to find out what was the final dividends recommended. Remember basics. Dividends on ordinary shares always consist out of interim plus final dividends recommended, and that is closed off then to the appropriation account. So to find out the dividends, the final dividends, I need to know the number of shares in issue. Now there's a few things that we need to consider. Final dividends was declared at the end of the counting period at 62 cents per share. Additional shares were issued and there were repurchase of shares. So if I look at the dates, the final dividends is declared at the end of the accounting period. The buying back of shares happened at the end of the accounting period as well. So now they specifically say to you, they will qualify for final dividends. So all those shareholders that sold their shares to the public, those from which we repurchase it, they will still qualify for dividends, for final dividends. This means that when we calculate now the 62 cents, we need to use 1.5 million shares and not 1.4 million. Make sure that you understand that. So the final dividends recommended was 950,000. Dividends on ordinary shares is closed off to the to the appropriation account. So the total dividends on ordinary shares is 1,680,000. If I now close off this account to the retained income, you can see that the debit side is more than the credit side. This means that the retained income account will be debited with 416,400. Completing the retained income note, I can use the appropriation account, the dividends on ordinary shares, and I must use the opening balances provided to you. So starting with the retained income at the beginning of the year, it was 1,150,000 plus the net profit after tax In your appropriation account, it's always the net profit before tax, and then we still need to subtract the income tax. So make sure you show your calculation in brackets. So net profit after tax is 1,263,000 minus the repurchase of shares. So that's an easy mark to get because they said 100,000 shares times 150 cents. That was the amount higher than the average price. Your interim dividends consist out of interims paid, 750,000, which was given. And the final dividends we've recalculated, recommended 1.5 million times 62 cents is 950,000. So the total dividends on ordinary shares must be shown in brackets. So now we can calculate the retained income at the end of the year, 583,000. Now when you're studying this for exam and test, make sure you're able to work from the top to the bottom and from the bottom to the top. Sometimes the retained income at the beginning could also be a balancing figure. And then they provide you with the balance at the end. This is why it is so important to understand your basics. Calculate the number of shares in issue on 30 April. Now we've basically done all of this. Because in our ordinary share capital, I've shown in brackets the number of shares. That is one option which I can use. We take the credit side minus the debit side, or you can use your timeline where you've calculated when shares were issued and when shares were bought back. So now it's so easy to fill in the number of shares in issue. Another option that we can use is we take the balance at the end in your ordinary share capital divided by the average price, and that equals the number of shares in issue. Remember in earlier videos I said to you, when we calculate the average price and it happens after the issuing of shares, one of our options is to use the balance at the end. In this activity, it wasn't possible based on how the information was given, but now at the end, I can apply that by calculating using the balance at the end to find the number of shares. Question 5 is typically asked in exams and in tests. So make sure that you understand this type of question, familiarize yourself with it. Miss Louisa Brooks recently owned 720,000 shares herself. As a shareholder, should you be happy with the price that was paid for the repurchase of shares? Comment and quote at appropriate financial indicators. So first we need to find out, but what was the total amount that we actually paid for the shares, what we repurchased? And then we can compare it to the net asset value. We can always compare it to the market price as well, but in this activity, they didn't provide you with the market price. So if I look at my calculations from earlier, the average price was 650 cents and the amount above the average price is 150 cents. So if I add the two together, the total amount paid is 800 cents or 8 Rand. To calculate the net asset value, we have to take the balance at the end in your ordinary share capital, 9.1 million, plus the retained income at the end of the year divided by the number of shares in issue. This amounts to 6 Rand 91 or 691 cents. So to answer now, what is your opinion as a shareholder? Should you be happy? Yes, we paid more than what the shares were actually worth and the average price. But now looking at how has this affected the percentage shareholding in the company when they decided to repurchase? So to find this out, we first need to find out what was her shareholding before the repurchase of shares and then after to see how it affected. So before, if she owned 720,000 shares, we have to divide it by 1.5 million before the buying back of shares. This means she had a 48% percentage shareholding. After the repurchase, we now need to divide it by 1.4 million. This means now she has 51.42%. So this now made her the majority shareholder of the company. Question number 6. Why should the director's fee be shown separate from the salaries and wages? We mentioned this earlier videos. The GAAP principle materiality is implied. Important information must be shown separately. It's important for the shareholders to know what the directors earn. Question 7. Calculate the total dividends paid this accounting period, which will appear in the cash flow statement. Dividends paid is dividends that was declared at the end of last year must be paid this year plus the interim dividends. And this is the amount that appears in your cash flow statement. So if we look at the information given, last year, the shareholders for dividends was 460,000. This means 460,000 must be paid this year to our shareholders. We need to honor that. Interim dividends paid was 750,000. So the total dividends, 1,210,000. This concludes now companies' new transactions. This forms the foundation of moving forward. So it's crucial to understand it. I hope you have a better understanding of how does companies with new transactions work. This activity illustrated that if you do not know your basics, you're not going to understand how to complete it. So make sure that you understand the foundation, the basics, moving forward. I want to leave you with this quote: nothing is impossible for a willing heart. In our next chapter, we are going to focus now on adjustments. We are going to look at all the different types of adjustment, possible adjustments that can be asked. And we're going to look at easy, medium, and more challenging adjustments. I hope you have a wonderful day.